Kenyan markets resuming trade today after yesterday's public holiday. Looking at the NSE 20, it's down by a fifth of a percent, 4,990 points. And of course, lots of optimism about the new president and promises to return to double-digit growth within 5 years of the Jubilee government. But the market coming back, and of course, everyone's saying that some shares right now have rallied just a little bit too hard. On the currency front, the shilling holding up 84.4 against the US dollar, sitting a third of a percent stronger as it stands this hour. In fact, the shilling has been, of course, one of the strongest performers on the African front when we're looking at currencies. But let's get into all of this. Crossing over to Nairobi now, Geoffrey Maina, research analyst at Old Mutual Securities, is standing by. Geoffrey, do you subscribe to the view that Kenya's market or Kenya's certain stocks have just rallied too far?
Hey, thanks for having me over. That's a positive sentiment to echo, but if you look at the overall market performance, we are seeing there's renewed investor confidence in the Kenyan stock market as a whole. In today's session, it's just a reflection of how the indices started the week. To date, it appreciated by 0.18% to close at 49.90. And you expect that this trend will continue in the near term, and we are hopeful that the NSE 20 will also once again cross the 5,000 mark.
A sharp sell-off in Kenyan Cobalt today, the stock down 7.2%, and that's after the disappointing results posted on Monday where they showed a loss of 6.28 billion shillings. Could you argue that this perhaps represents a buying opportunity? Because most of the analysts I speak to say they're still positive on the retail side of the Kenyan Cobalt's business, especially in light of their expansion across East Africa.
Yeah, that's true. But you see, the Kenyan Cobalt, it's being partly affected. The result that they announced, it was largely impacted by the foreign exchange losses and even rise in administrative costs. The administrative expenses increased by almost 40%, and also the deal with Puma, it was expected to sort of bring some turnaround to the company, but that deal didn't go through, and it has also given some negative investor interest in Kenyan Cobalt shares. But we are hopeful in the near term, and sometime this year the Kenyan Cobalt will perform better, because the Kenyan Cobalt operates in East Africa. It has retail outlets in East Africa, and the oil industry as a whole, it has a renewed optimism, and you expect that Kenyan Cobalt will also benefit from this interest going forward.
I suppose you could argue, runaway expenses there with a 40% increase, so management has to certainly do something to rein that in. In other news today, TPS Serena also posting their results, 20% drop there in full year earnings per share. Sales in Kenya, sales in Zanzibar have been falling back, and of course, once again, you've got costs increases outpacing top line growth there. What are your thoughts on the company's performance this time around?
TPS Serena, we know very well that it operates in the service sector. It's in the tourism industry. Last year, the tourism sector as a whole, it had some negative setback. The insecurity issues in the coastal strip of Kenya and also in the Somalia region, and also TPS Serena, the tourism number, they had sort of slacked down. But with the renewed and recovery interest in Europe, we are hopeful that come this year the company will have some favorable returns. We expect that going forward, given that we have a stable political environment, we have a new government in place, the election was peaceful, we expect that tourists will start coming back to Kenya. Last year and towards the end of last year, they were partly affected by the travel advisories that were issued, but now going forward, that we expect that will reverse. We have also seen that TPS Serena, it's tried to improve on its bed capacity by refurbishing the Mara Serena and also the Sweetwaters camp. That will also, going forward, help them grow their revenue streams.
Yeah. And lastly, Geoffrey, we had some news that the insurance sector, there's been legalization of banking halls as distribution channels, you could call it that, for cover products. How's this going to impact the insurance sector, where one of the biggest challenges has really been adequate distribution channels, and of course under-penetration is what we're looking at for insurance in East Africa generally?
Yeah. The biggest challenge that has been facing the insurance sector in Kenya is the penetration level and the distribution channels that is available to them. But now, because they've been legislated to use the banking sector as a distribution channel for some of their products, largely being the bank assurance products, we expect that this will enable the insurance to grow their revenue stream. We've seen in Kenya, the banking sector, we can say it has a large presence throughout the country, and so it will depend with the kind of partnership that the insurance industry will come up with the banking sector to be able to maximize on this new avenue, to be able to grow their revenue streams, and also to make sure that the insurance penetration level it starts improving in the country.